All right, joining us now for updates on the commodities market is one of the research analysts with financial derivatives company, Dumebi, Iyeke. Happy New Year, Dumebi. Good to see you. You're looking very good.
Thank you.
Welcome.
Yeah, I'm sure you listened to our conversation with this African farmer talking about agriculture. He did mention agriculture value chain. And of course, major issues there have been the lingering food import restrictions and currency devaluation. We've seen what is happening in the foreign exchange market. Now we don't even know what the central bank is trying to do there. But how do you see this, driving the domestic commodities market space?
I mean, the first thing that we need to do is to situate the fact that we are still very optimistic about 2021. But I mean, we've entered the year with a lot of uncertainties. Just like last year, we're still seeing COVID cases spike. We're still seeing a lot of currency volatility. We're still seeing, so much happening that one can't really put a finger to say, okay, this is how 2021 is really going to look like. But however, looking at what's happened so far, we can say that 2021 is going to be a year of a lot of reforms, both for forex market and, the general fiscal space. For the domestic commodities market, how this is going to affect, commodity prices, definitely when there's currency volatility, it affects manufacturers. And especially manufacturers that import, a lot of their input raw materials. And when their import cost is higher, it affects their production cost. And every rational manufacturer would want to pass down this burden to the consumers in form of higher prices. So we could still see that play out in the domestic commodities market. Food prices could remain high due to, the exchange rate pass-through effect of, the currency volatility, currency devaluation, and a lot of these reforms, on food prices. Yeah.
So, we've seen a bit of uncertainty in the FX market.
Yes. And
the Naira closed at 410 at the INE window last week. And yesterday, first trading day of the year, we saw the Naira trade at 394. What does this tell us? If you're an investor, what would you do? I mean,
definitely, currency volatility for every rational investor is, it's a signal that, let me just take a breather, let me hold on, or I move my money to the equities market. So as a rational investor, what I would do is I would hold on in every Naira investment right now, because there's a lot of, bumpy ride going on there, and move my money to the equities market. Some might not move, but rather what they will do is hold on, with their investments. Definitely currency volatility, what it does for the investment space is it increases a lot of, investor uncertainty. It also increases a lot of skepticism in that market. So everyone is like, should I not? But every rational investor would want to move where they would make a lot more gains. And a lot of times they move towards the equities market. We also saw that happen, yesterday when the dollar lost some value. We saw a lot of rally towards gold, safe haven assets, and the price of gold really increased as of yesterday. So definitely when that happens to any currency, we would see investors, react in that manner.
Now, do you think the Naira is gradually approaching its fair value? Because some analysts would say that, central bank is likely going to adjust the Naira to its fair value. And when we talk about fair value, what is this fair value anyway?
I mean, if we look at, it just simply means that the currency is reflecting a market situation. Right. There's a lot of things happening, and when you peg your currency to a particular level, or to a particular value, a lot of times investors are looking at it that this currency is not really reflecting what is happening in your economy. So that's what they're looking at in terms of fair value. A lot of investors right now are looking forward to a market-driven exchange rate regime. So that is a true reflection of what is happening in your economy. So if your currency is not reflecting that skepticism is still there. So that's why a lot of people are having that conversation, especially the recently concluded IMF Article 4 review. That the IMF was still saying that there is still that need to end the multiple exchange rate regime. So a lot of analysts are saying that right now we might not see that full unification happen, but we will still see those exchange rate reforms towards that process. So the convergence would still continue this year to ensure that that face value, that market-driven exchange rate regime is, full-blown
But do you see the CBN adjusting the naira band again anytime soon?
It's a huge talk. It's something that's a huge probability right now, especially with what we saw happen at the IFX window. We could still see that happen with the official rate. There could be that adjustment, but one can't really say. Like I said, there's a lot of uncertainty going on right now, just like what 2020 was. So we can't really say this is the exact move the CBN is going to make. But with what we're seeing, it's a likely option.
Okay, let's look at again what you have on your burning economic issues. They're talking about wheat importation, which of course is above $1.5 billion. So how does this currency adjustment affect wheat imports and perhaps in turn the price of wheat-related commodities? We have flour and we have bread.
So generally, whatever happens to there are a lot of commodities that whatever happens, in the global market for that particular commodity, we will see the same effect in the domestic commodities market. And recently, due to the Russian wheat export quota that's supposed to kick in, in mid-February, we've also seen an increase in, demand for wheat and also corn. So that has really buoyed wheat prices in the global market. And Nigeria imports wheat. So when we see that, happen in the global market, when there's an increase in price, and we're seeing our currency, extremely volatile as what's happening now, manufacturers who import this, commodity are going to spend more. That's just the simple meaning. They will spend more to buy this commodity. And then, like I mentioned earlier, we would see that play out in their production costs and eventually the price of, wheat-related commodities like flour and bread. And we've seen that happened in the price of flour. The price of flour has increased, by almost 20%, to about 14,500 naira per 50 kg bag right now. And for a commodity like bread that, it's not so price elastic because it's something that almost everybody eats every day. What we likely would see retailers do or producers of this commodity do is they would miniaturize. What does that mean? They would reduce the quantity, so they would create that illusion that the bread is still much. But it's not so much. And you can't
like
really
the
blame
Gala
them.
story.
Exactly. So and you can't really blame them because their input costs are really increasing, and people also are battling with lower income levels, so they can't buy as much. So everybody is trying to manage it the way they can.
But how much wheat does Nigeria produce at the moment?
Currently, like what I saw from the USDA report, Nigeria produces about a little over 60,000 metric tons of wheat, and we import an average of 4.7 million metric tons of wheat. So meaning that there is that huge supply-demand gap that our local production cannot service.
Do we have potential to produce more?
Of course we do, we do. But the lingering, just like every other agricultural commodity that we've had so much conversations about, the issues concerning the storage, issues concerning the farmers' incentives, issues concerning the irrigation structure, all need to be addressed first before we can, harness our potential. Nigeria has vast resources, especially in agricultural commodities, and not just only wheat. So if these issues are addressed effectively and there is that maintenance culture, we would see our production of several agricultural commodities increase sufficiently to not only meet our domestic demand, but now that we're having talks about regional demand, that would be serviced, and inadvertently we will boost our production so much so that we can now service global demand.
Okay, now going into 2021, looking at some of these issues that you've talked about, domestic commodities space, what's your inflation forecast? This short to medium term?
So generally, we still expect food inflation to be the major culprit of high inflation levels, and this is not only because of the effect of the exchange rate pass through, but we're still looking at the insecurity in major food producing states that are really cutting down on our food reserves. That alongside supply chain disruptions, and right now with the spike in COVID cases, we're hearing talks of a precision lockdown in Lagos. So we saw what happened in Q2 2020, and we could see that happen again. And how this is going to affect, food prices generally. So that would have a huge impact on the entire inflation basket.
Yeah.
So that's one. Generally, we're looking at inflation for Q1 2021 to be above 15%. To be above 15%, and the EIU estimates that inflation for 2021, that's for the entire year, to be around 16%. So if that happens, it just simply means there is more damage being done to consumer disposable income.
Yeah.
And but on a quarterly basis, actually, due to the combined effect of the AFTA and the border reopening, we're expecting that on a quarterly basis, inflation begin to decelerate, and that's because of the combined effects of those measures or those events or developments on domestic commodities market. They were expecting that their impact would be more potent in like Q3, Q4, and that would also coincide with the harvest season.
So one of the other burning economic issue was the Nigerian Eurobond maturity of the 500 million. Will this meet the obligation for maturity?
Well, the first thing that I looked at when I saw that was definitely our external reserves could do justice to that.
Yeah.
But as much as if that happens, it's a good thing because we're meeting up to maturity, so that puts us in a good light in the global market, and more investors will be like, okay, yeah, so they're doing something about it. But for our external reserves, by the time that happens, there will be a huge drawdown on our reserves, and this would feed into more currency uncertainties, because now the ability of the CBN to keep the naira stable, has been limited again, and this would, once there's more currency volatility, this in turn, would affect manufacturers.
Yeah, that brings to question if the central bank will be able to sustain, the continuous defense of the naira going into 2021.
Definitely. So that's if that happens, because right now we're not so sure what that means. The CBN or the federal government might use to meet up with this maturity. I, for one, as an analyst, when I saw that, I was like, okay, the external reserves could do justice to this, because this is $500 million, and the external reserves is about $35.3 billion. So that could do some justice, but at the same time, there would be a huge drawdown on the reserves, and this has a ripple effect.
That now brings us to what's happening in the global oil markets. Yes, now we've seen the oil hover around $50 per barrel.
Yes.
Yeah, but then OPEC Plus met yesterday but couldn't agree on the output cut, and they are meeting again today. So there's still some kind of uncertainty, and we don't know where that will take the oil price. So what's your expectations on that, and what's your outlook on that market?
Okay, so the first thing that we're looking at, so starting with the OPEC meeting, OPEC already had a decision that, instead of us meeting, a few times in a year, let's meet monthly to review our, supply, our global oil supply. Let's have that conversation more frequently because of the things that are happening in the global economy. We're seeing cases spike. We're seeing that there's a new variant. All of this, put global oil supply in a very sensitive position, because any decision on global oil supply would definitely affect, oil price. And if there's so much oil in the market, we'll see oil price crash. And everybody wants to benefit. Everybody wants to go home dancing. So at the end of the day, they're having this conversation to ensure that, let us come to a compromise. I mean, the main issue why they were not able to, finalize their talks as of yesterday was because Russia is saying let's increase oil supply. Saudi Arabia and some other countries are like, please let's not do that right now because of what's happening, in the global economy. So what my outcome or my outlook for that is, I think that they will definitely come to the table to compromise. Why? Because they really have to tread with caution at this time, because the market is still extremely volatile, and we don't want a repeat of what happened in Q2 2020, where the price war between Saudi Arabia and Russia sent oil prices down to as low as $18 per barrel in April. So we don't want a repeat of that. So they will definitely, come to the table to compromise.
Thank you so much, Dumebi. Thank you so much.
Thank you.
It was great having you.
Thank you so much.
And Happy New Year to you.
Thank you.
Happy New Year.
Thank you. Happy New Year to you too.